welcome to Everything About Wealth, the podcast. This podcast is focused on wealth building, and I am your host, Denny Troncoso, and I am here with your co-host, Desiree Troncoso. Desiree, are you there?
I'm here, Denny.
Hey, great. How you doing, Desi?
I'm okay. I'm getting over a little cold, but I am prospering.
All right. Well, you need to get better because if not, you're going to get me sick.
I know it.
Well, ladies and gentlemen, what is the podcast all about? This podcast that we've put together, and why have we created it? Why have we done this? And the main reason is that we want people to learn. We're not here to tell you what to do. We're here to give you the resources so you can make the best financial decisions for your goals in your life. Does that sound about right, Desiree?
That sounds about right, Denny. We always want to harp on that because a lot of times people ask us, well, what should I do? Or, which way is the best way? And it really depends on the person, right? Some people really like real estate. Well, great, go into real estate. But someone may not like real estate. They may prefer something else like a business or a commodity. So we're not here to say this is the only way that you can make money. You have to follow this. We're here to provide all the resources for different areas and ways, tips, and strategies so you can go find out what's best for you, right?
Exactly. So we want to talk about wealth building. We're going to talk about a lot of different areas on our first show. I'm so excited about it. And like you said, this is more about providing resources, sharing information. And then our goal is that by sharing this information and this knowledge, that it's not only going to come from us, it's going to come from a lot of other different people and experts, but that you can make better decisions for yourself. So a little bit about me. My name is Denny, and I am a real estate investor. I invest in real estate full time. My story has been at this about close to 10 years, started investing in 2010. Funny thing, my family, not really funny at the moment, but looking at it now, how I've learned from that. My parents they started in the flipping, of course, during the big recession and bought a few houses, and it actually didn't work out. But I stayed. I knew that there was real estate investing was a possibility. I was very interested in the topic and read, of course, the famous Rich Dad Poor Dad book and Cash Flow Quadrant and kept going. And then in 2010, joined my local RIA, started flipping houses and doing wholesaling. Then in 2013, bought a couple of rental houses and started managing them on my own. I was in the insurance business at the time, and as an insurance broker, started as a financial advisor, financial analyst, and I built up a great portfolio of clients doing my real estate investing and my insurance. And once I built my clients, it was great because I was making passive income technically from insurance, but it was reliant on a company, and that company, after I built a big book, actually ended up going out of business. So a big book of clients, close to $5,000 a month in income, completely went out the door. And around that time, I had already been investing in real estate. I've been doing a couple of deals a year, but I said, you know what? I want to make the majority of my income to come from real estate. So in 2015, I listened to my wife, Desiree, who's on the call with us, and she said, we need to go into commercial real estate. And we did. And we actually been doing commercial real estate, focus on multifamily properties since 2015, and we've done pretty well. We can always be doing better, but I like it that we're in the game and that we're competing and that we're trying to grow and get better every day.
Yep, exactly. I was just gonna say to let everyone know, I don't think everyone knew that we're both business and life partners. So Denny and I are married, and we've been working together in real estate since 2012. So it's been a long road.
It's been a long road. We've been having a lot of fun. Of course, there's been those ups and downs in business and the challenges of business. But overall, I think it's been a great journey, and I learned a lot and still enjoying every day of it.
I agree, because you're just trying to get better every day.
That's right. That's right.
But, let me tell them a little bit about myself.
Mm-hmm.
So my story is I actually was working for a company, and I enjoyed what I did because I was doing some auditing, which I do enjoy. But it was difficult because sometimes I was in the office. I would arrive earlier than some employees, and then I would still be there working when the other employees were leaving. So I had a lot of hours in that I was doing at my job. And also just, how some things go with the company, you're limited, right? Because you're working for someone else. And so I really wanted to get out and do something where I was in more control of my life, but also, number one, my income, because as we all know, in jobs, unless you're continuously moving up the ladder, which is possible depending on where you're working, it's hard to do it as quick as you want, because sometimes there's employees there that are there until they retire, right? So unless you're looking for another job or doing this continuous cycle. And I just wanted more time for traveling and doing the things that I wanted to do. But I actually, funny thing, started in real estate way back when, in the greatest time to start in real estate, around 2009, when I did a commercial real estate internship. That was very interesting. I have always been interested in real estate, but for some reason, commercial real estate, which was always just more interesting to me. I don't know if I was just always, bigger is better. I don't know why, but it was just very direct. It wasn't, different from residential homes where it's more of the emotional. I just liked more of the direct, straight to the point, black and white of commercial real estate.
Which is really not like that, we've learned.
Yeah, exactly. So then I got into real estate, but due to the economy, unfortunately, I had to go in a different path, which is always what life is about, right, Denny?
Mm-hmm. Yeah.
So I went
Never
ahead.
works out the way you think, right?
No, but you have to move on,
Mm-hmm.
So I went and started working, and from there, later down the road is when I actually met Denny, and Denny was telling me about his involvement in real estate, and I was like excited. I'm like, really? You're doing this in real estate? So after some time, we had known each other for about a year before we actually started dating, but then we started to work together. And from there, like Denny said earlier, we started flipping, we started holding residential homes, and I just knew that we should do more, do bigger for passive income, because I just felt that at the time, a lot of people were getting into flipping, but also it was a job. You're continuously having to find the next property, the next property, the next property. With passive income, you could have a building, and every month, as long as you own the property, you have income coming in. And so that's when we went ahead and started getting ourselves into seminars and learning more about multifamily, reading a lot of books. And that's where we are today.
Excellent. So the podcast, you've learned a little bit about us. Now, we've created this podcast for people that are seeking a better life, whether it is that you want to move up the corporate ladder, maybe you want to find career advancement. So we want to bring in professionals and experts that can give you tips about that, because wealthy is about everything, right? You can be wealthy in a business, you can be wealthy in a career. You want to diversify your investment portfolio. You like what you do, but you want to diversify. You don't want to just be in stocks and bonds and mutual funds. You want to put in real estate and gold and different type of businesses. Maybe you want to change careers. Maybe you are tired of what you're doing. You're a little bit burnt out, or you're bored. So you want to do something different. Maybe you want to retire early. Maybe you want to do it in your 30s or 40s. That's very possible, depending on what your goals are, depending on how you organize your finances. Or maybe you want to retire, period, right? There's Social Security. It's a bit unstable. They say that in a certain amount of years, I think it's by the 2030s, they're going to be sending out more money than's coming in, because there's not that many people that are paying into the system. So what's going to happen with Social Security? It's uncertain. You want to be able to have more money than Social Security, because maybe you don't have enough money for your retirement. You hate your corporate job and you want to leave it, or you love your job, but you just want to supplement your income. Maybe you're a teacher, you love what you do, you work with kids, but you want to be able to supplement that income. And so that's one people that can benefit from the podcast. And the other is, if you're a passive investor, if that's something that you're looking to be, you're looking to invest capital in a passive way and get a return on your money. If you consider passive investing on a deal, the podcast is going to discuss questions that you should be asking of the people that you're investing with. Very important. Some of the rules and regulations that they should be following and that you should be following to protect yourself. And other important information about being a passive investor, because we've also passively invested in a deal and we've learned a lot, haven't we, Desiree?
Yes, we have. Definitely.
So by learning and sharing information in this podcast, we'll be able to hold the company or sponsor, the person accountable to make sure that your money is in the right hands. And this applies to most industries. As private investors, there are rules that people should be following that are SEC rules and regulations, Securities and Exchange Commission, if you don't know what SEC means. And it's basically the government's created rules for people to follow when raising money for so many different areas, businesses, real estate, etc.
Yeah, Denny. And one thing that's really important about a passive investor is just because you're passive investing, it doesn't mean you're not involved, right? You still want to know what are some of the reports that you're reading, what they mean, so that you can understand what the numbers are telling you. Because how are you going to know if a property isn't operating correctly if you don't understand the type of reports or the information that's being sent to you?
That's a very good point.
So
and also what else you should be doing, to make sure that your asset is performing. I mean, we even do site visits and stuff. So you check your asset, make sure it looks good, right? Because if it doesn't look good from the outside, then the financials may also be affected as well. So
right, exactly. So we're going to go over more tips and strategies about doing that as a private investor as well, which I think are very important.
Yep. And the next one is asset types, and you want to go over that one?
Yeah, of course. So we're gonna, the podcast is going to encompass various different types of assets you can invest in. As we spoke about earlier, we're not here to tell you what to do, or we're not here to tell you have to invest in real estate. It's the only way that you can build wealth. That's not who Denny and I are. There's multiple ways to make money. And so we're going to try to make sure that we have information on all types of wealth building strategies that are out there. So it can include business, real estate, of course, paper assets, commodities, etc., as much as we can find. If it makes money, we want to talk about it, right, Danny?
That's right. If it produces dinero,
yes, exactly.
That's something that we're going to be talking about.
Exactly. So, Denny and I, we focus on real estate, and even we're focused within real estate on a niche, which is multifamily. We have done other things we've talked about before, flipping and holding residential. And we've kind of stuck our toes in a little bit of retail and the different types of commercial real estate and some business. However, we're not the expert in everything, so we're going to make sure that we do bring on individuals who are currently investing and working in the other types of assets. We're not going to be able to give you all the good juice and strategies about. And of course, the podcast is going to speak more about living a balanced, wealthy life. Money doesn't buy happiness, no matter how much, people believe it. And, sometimes we get on this cycle where we want more money, because only way we're going to be happy. And I'm here to tell you that a lot of affluent, wealthy individuals have told us money doesn't buy you happiness, even when you have enough money, because you have to find that within yourself first. You need to be happy. You need to be, look at your life now and say, I may not have everything that I want, but I'm happy to be alive. I have a family, or if you don't have a family, you like doing the things you want to do. So we're going to try to make sure to include a little bit more about that as well. And, finding something that allows you to live the lifestyle you want. All of us don't want to live the same lifestyle. Some people may want to their goal is to own a Ferrari, like Denny. But for me, I prefer to have, the Camry and travel more. So you really need to just find out what the lifestyle you want. Don't try to copy off others so that you can find happiness, right, Denny?
That's right, 100%. One of the things uh, that allow us to live the life that we live, be full time, is to live in a smart way regarding our finances, and you learn more and more how to respect money and treat it the right way, so they can let you live the life that you want. And I'm also a big believer in enjoying some of the things that you love, whether it is toys and, like you said, the Ferrari for me. But I won't only do that when our financial allows us to do that. So the key here is not to overextend, and we'll have shows to discuss that and to talk more.
I like the respect the money. That should be a new quote. Tweet. Respect the money.
There you go. Hey, I'm gonna throw it out right now. Yeah. So we talked about who we are, and then what our goals. Some of the things that we love to do, of course, is travel and real estate investing and working in businesses. It's fun for us, kind of like Monopoly. And we just have fun with it. It's really not that serious. Of course, we study and we work hard to master the information, but then we like to take action and enjoy investing in the process of it. So why don't we go into our first topic for today, which is why we chose multifamily as our investment of choice.
Let's do it.
All right.
So I can go first and talk about a little bit why we chose multifamily as our investment of choice. It's always, the curious question we get from people. And one of the reasons we chose multifamily is because it's low risk compared to other real estate investments. Again, I'm not here to say there is no risk. The important part is that it's low risk, right? So compared
or even has lower risk, we could say.
Yeah, exactly. Lower risk. And the reason why is because compared with other types of real estate asset classes, which are retail, industry, office, etc., everybody needs a place to live. So at the end of the day, we are all working, but where do we go? We go to a home where we can cook dinner, spend time with family, sleep, take a shower, do the necessary things we need to do. Compared to if you own a office building, well, when the economy or the market is changing and the market cycle, it might be going down. A lot of times those businesses will either change to smaller spaces, or a lot of independent business owners, entrepreneurs will decide to work from home. So the fact that it's not necessarily a need to have a place to work, you do need a place to live. And we've also seen throughout the market cycles that multifamily, compared with others, is one of the asset classes that does come out better. It doesn't mean that you're not going to lose a multifamily property if you do not invest well or if you don't buy well, because there are specific tips and strategies on how to buy within different market cycles and how to maintain them also through different market cycles. But compared with others, it is one of the more resilient ones, only because, again, if people are losing their home, a lot of the times then they're having to downsize into an apartment complex or a multifamily property. And from there, you continuously have some form of business. And the last one, which is something that we've really experienced because we used to hold residential single-family homes, has long-term tenants or rentals. Multifamily has multiple tenants paying rent. So if you own a 10 or 20 unit multifamily property, one person moves out, well, guess what? You have 19 other residents that are still paying rent. Compared to a house, if the tenant moves out or the resident moves out, you don't have any form of rent coming in. Now, if you own multiple homes, this may be a little bit easier for you, right, Denny?
Yep.
Because you have the economies of scale at that time, and we're going to go over a little bit more about economies of scale. But if you own 20 or 40 homes, which we've known someone who was able to do that, if they lose one renter, it may not affect them as much. But it does take longer to build your portfolio with single family homes. So at some form and point, you are going to come across um, that con where you're not going to have anyone or any form of income coming in, and you're still expected to pay the mortgage, the insurance, and everything else that comes along with it.
Yep. Those are good points. One of the things that I really love about multifamily, and there's also different types of commercial real estate where you get to enjoy this, is that it's passive cash flow. So you can have a professional property manager that takes care of the property, collects the rent, handles any late rent, evictions, handles the work orders when people call in, they have issues, then repairs that the property needs. They handle that whole process, and it's a professional company that can manage that asset and that can deposit your money in the bank from the rents. So that's so powerful, because I remember when I used to manage a single family homes, though it was a great experience, it was something that it was a chore. It was a responsibility. It's a job. Managing properties is a job. So whether if your property you are buying, if it's a multifamily, you can afford to still make good amount of cash flow and pay a property manager at the same time. And I really like that.
Right. And if you're a property management company, that may be a service or the type of skill set that's for you. So that might be a perfect business for you. But that wasn't our business at that point, right? We were wanting to grow more of our portfolio as well. So it did take a lot of time away from us being able to do that.
Exactly. So you when you have a property manager, they're collecting the rent, they're doing that responsibility, they're doing the job, they're earning a fee for that service. But that's something that you don't have to do, that you can focus on acquiring more properties and overseeing the property manager. It's not like you're going to just completely walk away, hand them the keys and say, send me the money. You still need to check, verify monthly reports. You still need to review, the leases, the rent rolls. There's a lot of different things you need to do. You need to be an asset manager, which is overseeing the property manager. But you don't have to handle the day-to-day responsibilities of the property. You can let them do it, and then you can do the high-level stuff, which is focusing on making sure the investment is accomplishing a great rate of return. Or if you want to have more time with your family, maybe you don't need to buy that many investments. Maybe you buy one or two, three, and you're comfortable with that. But now you can just oversee the reports that things are operating correctly.
Yeah, exactly. All great points. Exactly things I was going to talk about. Passive cash flow is really that. It's just someone else is doing the day-to-day task for you. And you start working, but you're not working the 40 plus hours at a job, right? You have someone else doing it for you. And another reason why we chose multifamily was because of the economies of scale. I kind of mentioned this earlier about economies of scale, which it means you have the ability to have so many units and reduce operating expenses. And then sometimes what happens is you increase your income. But how economies of scale works is, say you have a management company you're wanting to hire, and to give a clear idea, you have someone that owns one home and is wanting a management company to manage it. And then you have someone else that has a 20 unit property. The property management company is going to charge a higher management fee to the person that has one single family home versus the person that has 20 units. So in most cases, what we've seen, all markets are different. You need to do your research. We've seen single family homes management fee around 10% on a monthly basis. For a 20 unit property, again, depending on the market, you may see something that's closer to 6 to 8%. And the reason why is because there's so many units in one location that they are able to manage. Instead of having to drive around town to manage so many different properties in different locations, They're also making more income because there's multiple units at one location. You're able to have more negotiating power, basically, when you have more multifamily units in one location, one area. Also, this comes with replacements. For example, a roof is a great example. When you have 10 houses, well, guess what? You have to get 10 different roofs. Compared to a multifamily property, we have a multifamily property that's 2 stories, and there's one roof that's basically over the multiple units. So there's other things like pest control. When you're coming to replace HVAC or water heaters, you're able to have a little bit more negotiating power just due to the size and the service that they are able to provide. Another way to think of it is I like the example is bulk. Whenever you're going to Costco, you can get bulk at a discount.
Bulk pricing.
Bulk pricing at a discount versus you just buying an individual item at a Publix or anywhere else you shop.
I love Costco.
It depends. It depends on what it is, but I do love Costco. Some things I think sometimes it's cheaper just buying it singly because you just need that one thing. But you're right. Costco does have its benefits.
Yeah. And then the economies of scale, I say, is one of the biggest benefits of multifamily. It's going to save you a lot of money in operating expenses, even though multifamily has, some high operating expenses because you have people living there, you have residents that live on the property you have to take care of, sometimes pay certain utilities, etc. But there's tons of benefits with economies of scale and saving. And there's other areas where you also save, taxes, utilities, etc. So the next one is tax benefits. And this is, there's tax benefits to multifamily properties and to commercial real estate and to owning real estate in general. And one of the biggest benefits, and we're not CPAs, we're not accountants. So this is something you definitely want to talk to your accountant or tax attorney about, but there's depreciation benefits that you can take advantage of. There's also something cost segregation, which is when you accelerate depreciation. And basically what this allows you to do is to keep more money in your pocket on an annual basis if you're making a high income. And then also another benefit of real estate in general is a 1031 exchange. And that's a pretty cool benefit because what that allows you to do is to sell a property. And then if you can buy another property within a certain amount of time, there's some rules behind it, but it allows you to take that money and not have to pay any taxes so you can use it to buy the next property and buy a bigger property. And there's a lot of cool benefits with real estate because in the end, the more money that you can keep in your pocket and keep producing cash flow is the key. Anything you'd like to add there, Des?
No, I think you really summed all that up. And I think you tipped, the berg there because I don't want to get too much into it. I'll leave that to the CPAs and the professionals.
Yeah. And then in one of our calls in the future, we're going to have a 1031 exchange expert to discuss some of the rules and the regulations with that. And then We'll have CPAs and tax attorneys and all that good stuff.
Right. And just a good rule is as an investor, and this is in any industry, as an investor, you're not going to be able to know everything, right? You're going to want to be knowledgeable and literate about the type of investments you're investing in, how to analyze them properly. But you want to understand how taxes work, right, Denny? Mm-hmm. But you need to know exactly how to, do everything with taxes and how it's going to affect you. That's why you have professionals. So make sure you have the right professional on your team that knows about the type of asset you're investing in so that you can call those individuals when you have a question and make sure you're getting the right information.
Oh, well said. Well said. And this was what you're saying is basically the Henry Ford, the story where he's in a courtroom and they're like, oh, you're illiterate. You don't know anything about anything. He's like, look, I have buttons on my desk. I just push a button when I need somebody to answer a question about something. That's all I need. Yeah, I don't need to know everything, and that's key. You don't need to know everything. Have a great team, but be knowledgeable. I like that.
Exactly. And that's what we do. We are familiar with majority of things, but we still have our professional team that we reference. Even during inspections, we reach out to our inspector and ask questions. So don't feel hesitant to reach out.
Yep. Yep.
um, and then the one of the last ones, I mean, going into talking about numbers and everything is multifamily, how easy it is to invest. Well, I'm not going to say it's that easy, right? Because that's a bit too much, but it is easier to finance than even sometimes it seems like a home or a car. But it seems that a lot of lenders really enjoy having multifamily as a part of their mortgage program. And I think it just goes into from what we've talked from lenders, it goes into just the risk of the multifamily industry compared to other types of asset classes. And it's really something that if you can go in and you have previous experience, the programs that are out there can really help you get your foot in the door and help you start building a portfolio. And even if you don't have the experience or you don't have all the funds, well, guess what? You're able to partner with other people in order for you to purchase. And sometimes even lenders prefer that, right, Denny? With certain construction loans, if you don't have any construction experience, they just say, hey, just bring in a partner and we'll be willing to move forward with that.
Exactly. And even if you don't have experience in that asset class, we've had people reach out to us to be partners because we're located in the southeast of the United States, and they needed a partner in that location. They didn't have that much experience in multifamily, so they reached out to us. So there's some benefits to partnering, but multifamily is definitely easier to finance. I think with single family homes, you're limited unless you find a special lender that can do like more than 10 loans. I think the limit is 4 or 10. With multifamily, it's, whatever the sky's the limit with that, with financing. And with that, I'd like to just say, unless there's anything that Desiree would like to add, I'd like to say to stay tuned for our next podcast episode, because that concludes today's podcast. And the next episode is going to be with Jason DeBono with New View IRA. He's an executive with them, and he's going to be talking about self-directed IRA investing. This is going to be a great episode. I really enjoyed it. It's something that I've partnered with other people that have self-directed IRAs and 401ks. But if you're looking to learn how to use your 401k or IRA to invest in different types of assets than the stock market, maybe you want to diversify some, or maybe you're tired of the stock market. Maybe there's so many different investment options. Or for those of you that are raising money for investments, but you want to learn how to talk to people that have these types of accounts, this is a great podcast for you. Now, with that, to learn more about real estate investing or about how to be a private investor, visit our website at everythingaboutwealth.com. In fact, how could I forget? Make sure to subscribe. Click the subscribe button so you can follow us on the podcast and you don't miss any episodes that may be coming up. Make sure to like us on iTunes, Stitcher, or your favorite app. This allows more people to see the show and become more exposed to it so we can continue to do more and more shows. And Desiree?
Yeah, and if you would like to follow us, you can follow Everything About Wealth on Instagram at Everything About Wealth. And if you're interested in following us on our personal Instagram, feel free to follow us at DTroncoso16 for Denny. And I am Desi, Dessi Troncoso.
All right. So with that, guys, I'll see you guys on the next show. Take care.
Take care.